Happy Taco Tuesday. I'm the Bullish CEO. Welcome back to the Bullish CEO channel where we discuss everything crypto. Taking a look at the markets, we got Bitcoin dominance right at about 70%, which is at its all-time high. And the alts are taking a beating, but that's okay. We're going to still remain bullish. So I got a couple articles for you today that boost up your spirits. Let's get into it. So the first article we have come from CoinDesk in reference to Bitcoin's total share of the crypto market now at highest since March 2017. So according to the article, it says Bitcoin price recovery from August 29th's low of 9,320 is backed by uptick in the dominance rate to 30-month highs. Weak trading volumes, however, indicate the recovery could be short-lived and fall back to 9,750 could be in the offing in the next day or two. Weekly charts indicators continue to call a bearish move. But this is the Bullish CEO channel, so everything is bullish, although it may look bearish. Also, it says a high volume UTC close above the bearish low high of 10,956 on August 20th. High is needed to revive the short-term bullish outlook. A weekly close of Sunday UTC above 12,000 is needed for a full bull revival. So Bitcoin is flashing green at press time, while its share of the cryptocurrency market has reached a 30-month high above 70%. Now, I do think with all these big institutions coming on board, this has a major factor. Well, it is a major factor in increasing Bitcoin's dominance over these last few months. As we know, we have Bakkt coming out, Fidelity, and other big time investors are starting to now jump in the market. And of course, the first cryptocurrency or digital asset that they're going to jump to is Bitcoin, because Bitcoin has that first mover's advantage. It's the one everyone knows. It's the one that's been around the longest. So persons are going to feel a little bit more comfortable investing in Bitcoin. Well, the institutions feel a little bit more comfortable investing in Bitcoin at this time. But don't worry, Bitcoin is just the first through the door, and then it's a domino effect. Then you'll have the other ones come after that. So as we keep reading, it says as of writing, the cryptocurrency is trading at 10,350 on Bitstamp, up 6% on the 24-hour basis after hitting an 8-day high of 10,506 earlier today. At that level, BTC was up 12.7% from 1 month low of 9,320 it hit on August 29th. So over the last 9 weeks, BTC has consistently found takers in the range of 9,000 to 10,000. The resulting recovering rallies, however, ended up in creating lower highs, a sign of a bull market exhaustion as seen in the chart below. And then also it says the question now is whether the latest recovery from sub to 10,000 levels will will invalidate the bearish lower high setup with the move above 10,956. The gains seen in the last 4 days look sustainable and could be extended further as BTC dominance rate, the cryptocurrency share of the total crypto market, has jumped 70.10%, the highest level since March 2017, according to CoinMarketCap. The gall stood at 69% on August 29th when BTC price slipped to 1 month lows below 9,400. Many observers consider price gains sustainable if they are backed by a rise in dominance rates, as discussed last month. The shift indicates money is being poured into BTC for the long haul and not to fund purchases of alternative cryptocurrencies. Trading volume, however, tells another story and suggests that the recovery seen in the last 4 days could be short-lived. Now, also, just to piggyback off of that, I also believe that that the reason the dominance, all the money is, like we stated before, the shift indicated where it says the shift indicates money is being poured into BTC for the long haul. Also, the I do think the hints of a economic recession have persons now looking to other assets to hedge their money as the dollar decreases in value. So and we keep going. It says, they have the chart here. It says the green bars buying volume seen in the last 4 days on the hourly chart are smaller compared to the red bars seen during Bitcoin's drop to 1 month lows on August 29th. Buying volume only ticked up slightly in 60 minutes to 2100 UTC yesterday. During that time frame, BTC rose from 10,200 to 10,470. Further, Sunday's green bar is significantly smaller than those observed during the previous breakouts above 10,000. Put simply, the price bounce seen in the last 4 days lacks substance and pullback, possibly to 9,750, could be in the offing in the next day or two. The outlook, as per daily chart, would turn bullish if the price prints at UTC close above 10,956 on high buying volumes. That will open the doors to 12,000, which we would love to see. I mean, I was here not too long ago when Bitcoin hit right at 14,000. Yes, it's, like I said, with this being a new asset class, you do have a lot of volatility, but also I would say in that same sense, where the volatility is, that's where the money is made. So right now, and also if you're not hodling or if you're just trading, these times are the times where the money is made. When you have those price those price movements like that, that's what, like I say, that's where the money is made. It says the Bitcoin bulls have failed 4 times in the last 10 weeks to secure a weekly close above 12,000. Meanwhile, the sellers have failed persistently. The sellers have persistently failed to keep prices below 9,500. I think that was a typo. A downside break looks likely, as key indicators have turned bearish, including a bearish crossover of 5 and 10 week moving averages. The moving average divergence histogram has also dropped below 0 for the first time since February. While the Chaikin money flow, which incorporates both prices and trading volume, has slipped to a 4.5 month low over 0.10, a sign of weakening bullish pressures. Well, I mean, I know like the numbers don't lie, as persons say, but like I said, with everything coming up, I still have a very bullish outlook on what's to come in reference to Bitcoin. Now, although I don't agree as Bitcoin being the number one digital asset or cryptocurrency, we over here on the Bullish C.E.O. channel, we like to call XRP the standard number one. Although right now Bitcoin has more market cap and a lot of the share, it's just a matter of time for XRP takes over that, my opinion. Also, I am not an investor. You invest at your own risk. Make sure you do your own research while investing in these new digital assets and cryptocurrencies. So let's go to the next article. So the next article we got is brought to you by EthereumWorldNews.com. And this one says Van Eck did not launch a limited Bitcoin ETF, but is bullish nevertheless. So, as we know, we just got word that Van Eck is going to be one of the first to start offering ETFs for Bitcoin, which is a major deal. If you don't know who Van Eck is, I already have it pulled up. I got you. So Van Eck right here was founded in 1955. Van Eck is an investment management firm headquartered in New York and having satellite offices in Frankfurt, Germany, and Australia. Van Eck Van Eck Associates Corporation and Van Eck Securities Corporations are also referred to as Van Eck. Van Eck Vectors ETFs about 75% of assets under management, and Van Eck mutual funds is about 25% of assets under management. represent the company's flagship investment offerings. The majority of VanEck assets are gold investments. The actively managed VanEck mutual funds covers the natural resources, equities and commodities markets, emerging markets equities, emerging market bonds, and liquid alternative asset classes. So, like I said, if their estimated worth is $49 billion, but this right here just shows me adoption. They're going to offer the ETFs to these corporations and to the big players, which right now those are the only ones that are going to offer the services to for right now, which is fine, because those of us who's been in for years, that's only going to increase our portfolio, because we've been holding now since the last major bull run, which I say, hey, let VanEck bring them on. So let's get back over here to the article. It says earlier Tuesday, VanEck Securities Corporation and SolidX Management LLC, two pro-crypto firms that are behind a leading Bitcoin exchange traded fund ETF application, revealed that they were going to be proactive, launching a workaround product. According to Bloomberg, they said that by utilizing a certain rule of Historical Security Act, the duo would be able to issue shares in VanEck SolidX Bitcoin Trust to qualified institutional investors. Now that's big, the qualified. So this right here this qualified institutional investors, let me know, is the big money. These are persons who already have credibility when it comes to investing. If I'm not mistaken, you have to have over I want to say $100,000 to be qualified. Now don't take that as law. I had to do a little bit more research, but that's 100,000 just came to my mind if I'm not mistaken. So it says VanEck's head of ETF product, Ed Lopez, is hopeful that institutional demand for Bitcoin will materialize in the demand for the nuclear product. The new product, which is singly unnamed, is very similar to a product that exists from Grayscale, which is another major company. We're going to do some more breakdowns about these other companies in later videos. A cryptocurrency investment company that manages over 1% of all Bitcoin in circulations. Let's read that again. The new product, which is seemingly unnamed, is very similar to a product that exists from Grayscale, a cryptocurrency investment company that manages over 1% of all Bitcoin in circulation. So they're working with a little bit of money. So the title says, not an ETF yet, still bullish. When the news spread, many were quick to call it an ETF, one that was limited, but an ETF nonetheless. Indeed, if you peruse the headlines outlining this announcement, the phrase limited ETF is used inconsistently. But according to the General Counsel of Ethereum Decentralized Financial Applications Compound, Jake, the ETF tag of a new product is misleading. What was that? Chervin, I don't know who that is. Pointed out in below the tweet claimed that the limited ETF classification is a cute marketing strategy, as this product from VanEck is inherently similar to Grayscale's Bitcoin Trust. Of course, they got the Twitter article down here. So it says, going down in the article, it says Bitcoin economist Alex Kruger followed suit, joking that it's like if one purchased a bicycle and called it a limited motorcycle. He added that this product is only available for institutions with over 100 million under management, registered broker-dealers, and banks. So my apologies that I cleared it up. I said 100,000, so I knew it was 100 something. So it's 100 million. So those institutions, they're only going to be offering it to the big money. If you don't have under 100 million under management, you can't even deal with them. So you tell me if that's bullish or not. So it says, despite this, many have still asserted that the release of the trust will only aid Bitcoin's price recovery. Despite this, many still asserted that the release of this trust will only aid Bitcoin's price recovery. Kruger wrote in a later tweet that this is bullish. Of course, this is the Bullish CEO channel, with the product giving Bitcoin a higher probability of a breakout of a current range to the top side. Indeed, with Grayscale Bitcoin Trust currently housing hundreds of thousands of BTC, it would be nonsensical to claim that such over-the-counter ETF-like products do not catalyze capital inflows into cryptocurrency market. More institutional investment mediums. The launch of this institutional only product comes ahead of the launch of Bitcoin futures by Bakkt, which is the 23rd of September. So it's as reported by this outlet previously, Bakkt will be launching its flagship product on September 23rd, 2 weeks after it starts storing BTC for clients during this week. The Wolf of All Streets, a prominent DJ and trader, recently argued that the launch of the exchange will be arguably the most bullish event for the institutional investors in the history of Bitcoin, which I agree with that statement, because now this is what we've been waiting for. You know, we've been waiting and we've been hodling all this time for moments like this. This is just one of many to come. So stay strong. Don't sell. I'm not a financial advisor, but I wouldn't sell. At this point, personally, I've been on Twitter, persons talking about they're selling, they're getting out. This is the one of the worst times to get out, because everything is about to start dropping, and when everything starts dropping, the portfolio starts popping. So what Rob Cash say? While you crying, I'm buying. Okay, what else we got? Let's get into the last article we have here. You know, of course, I have to have some XRP news in there because I am bullish on XRP. So it says from Cointelegraph, the article says Ripple hires congressional assistant as government relations manager. This is big news. So Ron Hammond took to Twitter today to confirm that the XRP community that he is the new manager of government relations of Ripple. Token Taxonomy Act. So on September 3rd, Ron Hammond took to Twitter to announce that as of today, he is the new manager of government relations of Ripple. Hammond was reportedly part of the team that crafted the Token Taxonomy Act, a bill that would exclude cryptocurrencies from the classification as security, as well as provide the introduction of regulation certainty for businesses and regulators in the U.S. blockchain industry. Writing about the new hire, the XRP Daily said, shout out to the XRP Daily. If I'm not mistaken, that's Alex Cobb, one of the young guys in the game, inspired me to go on and start a channel. So I want to shout out to Alex Cobb and the XRP Daily. It says Ripple works with more than 50 governments around the world, and now somebody from the U.S. government is managing the government relations at Ripple, which is awesome. Glad to see Ron Hammond join the team and help build the internet of value. So it says XRP community takeover. As Cointelegraph reported on August 28th, the XRP community has been threatening a takeover, i.e. a hard fork, if Ripple executives keep on dumping XRP. Now, I can speak to this because, you know, I am a part of the XRP community, but this is just stupid. If I'm not mistaken, is it Bitcoin, BitLord, or one of the, I forget who's the person who started a petition going around, and they've gotten a lot of signatures, but they're trying to fork XRP. You can't fork XRP because, first of all, XRP has already, Ripple, the company who owns XRP, has already established over 200 banking relationships that we know of, and just to fork it and have a fork of XRP is going to be useless, because at the end of the day, Ripple has already been laying the pipes as far as when it comes to the relationships. You can have the digital asset, but if you don't have the relationships for the persons to utilize that digital assets, then it's for nothing. But keep going. It says Brad Garlinghouse, Ripple chief executive, felt the need to diffuse the situation and respond promptly by saying, XRP sales are about helping expand XRP utility, building RippleNet, and supporting other bids building with XRP in Dharma and Forte. The reality is we decrease our sales by volume And since then, the inflation rate of XRP circulating supply has lowered than that of BTC and ETH. So I mean, this, first of all, going back to just the title with the congressional assistant now joining Ripple. This is bullish. If this doesn't scream bullish, I don't know what else screams bullish. This is the person over well, if this is the person that was on the team who crafted the token taxonomy act, and the fact that they're on the on the board at Ripple, or that he's now becoming the government relations manager. Okay, why hire this guy? Why would you need this guy? Well, first of all, this, you just, you follow you follow what they're doing, not what they're telling you. So with this being said, this is a major bullish news because of the fact of who he is, and now the fact that he's working with Ripple. They didn't say he was working with Ethereum, Litecoin, or all these other digital assets, which I have nothing against, but the fact that he's coming on board with Ripple, it shows a lot. So that's gonna cover the news for the day. I appreciate you all coming back to the Bullish CEO channel, where I'm the Bullish CEO, where we discuss everything crypto. Until next time, saddle up.